Thank you for joining us at xm.com for this special report video. I'm Christina Marujas, and joining me today is investment analyst Marios Hadjikyriacos. We'll be looking at the potential for a fiscal stimulus program in Germany and, of course, the outlook for the euro. Now, things have been rather gloomy in the eurozone area. Fears of a recession are growing day by day. Germany, on the other hand, has announced that it's preparing a fiscal package to support its economy if a crisis hits. Now, do you think that will help improve things, or will it come too little too late?
Most probably too little too late, in my view. So you are absolutely correct. We've seen the entire euro area, not just Germany, slow down recently. But Germany has been at the center of this. In fact, Germany posted negative growth in the second quarter. This has been a result mainly of Brexit concerns and the trade war taking a toll on German exports, more or less. Well, we've also had the emissions scandal, hitting Germany's car industry. But what's important here is that the euro area is slowing down, and Germany might in fact enter a technical recession very soon. If it posts another negative quarter in the third quarter, that would be the definition of a technical recession. The government has come out and said, if a crisis hits, we are going to prepare a 50 billion euros worth of a fiscal package. In my view, that's too tiny and too late. Well, first of all, 50 billion for a country of size for an economy of size 3.4 trillion is relatively tiny. It's just 1.5% of GDP. Secondly, you don't really want a recession to hit before you act. You want to be proactive. So, you want to avoid the negative impact on business sentiment and on the consumer as much as possible. You don't want to be reactive. So for these reasons, I think that even if a German fiscal stimulus package comes, it's probably going to be too little, too late.
On the other hand, the ECB has signaled that it's preparing a large stimulus package which could be launched as soon as next month. Do you think that will help balance things out, the negative effects of Brexit, the trade wars, and more recently, political turmoil in Italy?
I think it will definitely help. I don't think it will balance things out. So the ECB has been, let's say, very proactive in this. It has said we are ready to ease aggressively. They are probably going to cut rates even deeper into negative territory next month, and they might even relaunch another quantitative easing program. Now, what's important here is that the ECB has already been easing quite powerfully for years now. So monetary policy is exhausted in a sense. Like the more QE you do, the less effective QE becomes. So it's definitely going to help a little bit, but it's not going to be a game changer, and it definitely cannot shield the European economy, in my view at least, from the impact of the trade war or, a chaotic Brexit, for example, in October.
Marios, and what about the euro? Let's have a look at that before I let you go. We've seen it struggling against its peers. Do you see any prospect of a sustained rebound, or is the outlook still gloomy?
The outlook is relatively gloomy, particularly against safe haven currencies. So the euro area might, even if it avoids a recession, growth is going to be almost flat this year in most of the important economies. So the economy is really struggling. The trade war is really starting to take a toll on the euro area. Now, what does that mean? If we see these risks escalate, the euro could lose out a little bit more, and safe haven currencies like the yen and the Swiss franc could be the main beneficiaries of that. Now, against the dollar, the outlook is not as clear. So the Fed is easing as well, is cutting rates, but it has been very reluctant to signal that it will act powerfully. So I think that the dollar could still gain against the euro over the next months. And for dollar weakness to really materialize, and therefore for a euro rebound to take place, we will probably need to see the Fed act more aggressively than it has already. So signal an easing cycle or hint at QE of its own.
Marios, thank you for joining me today and for your insights. And thank you for watching us at xm.com.